are doing, and we've kind of given you a summary already. In fact, nearly 3% higher on the Nifty 50 index. It's a very strong move which is sustaining. More importantly, 25,750 thereabouts is what we're hovering around, and we have hovered around pretty much all through the day today. In terms of advanced decline, let's pull up those charts, see how the advanced decline has been. It's been very, very strong in terms of the breadth, and that is, of course, the key positive. The less than 300 declines, honestly, on the index, and or rather in the market, at least today. So you're seeing a very positive tilt with regard to the way stocks have moved and the way the breadth has shaped up. You're looking at the Nifty Metal, the Nifty PSU Bank, and looking at the Nifty Pharma as well, which has done very well for itself in trade. Let me first start off, before I go elsewhere, to the mid-cap and the small-cap indices. In terms of the way in which trade has shaped up for them, they've again done very well for themselves, but largely in line with the index. So around 2.8% higher on both the Nifty mid-cap as well as the Nifty small-cap indices, which are on your screen now. What you're also seeing as a result is that there's a very favorable breadth. But let me talk about sectors now. First off is the Nifty Realty. It's the top sectoral gainer for the day. It's up 4.5+% odd and has sustained the gains from the start of the day as well. So you've seen a very, very decent move on that one, 4.7% higher as we speak. What you're also seeing is a tilt towards US, of course, understandably. The Nifty Auto is doing very well for itself. The Nifty Bank also doing fairly okay, 2% higher on the Nifty Bank as well. Nifty Auto up nearly 3, Nifty Bank up 2.5 on a day like this. And therefore, what you're seeing is that the tilt is largely positive with regard to across sectors. Maybe the weakest sectors, maybe the likes of an FMCG index, is the only possible place where you aren't seeing that kind of excitement. 0.5% higher, and has been that way for a better part of the day. It slipped into the red, in fact, surprisingly so, for some part of the day, but 0.5% higher as we speak with regard to the Nifty. Now, so yes, you've got all of this playing out with regard to the India-US deal. Let's pull up some names, and you look at the likes of an Aurobindo Pharma. You look at, these are names we discussed in the morning as well, and in fact, Kunal gave some names to us as well. So the likes of an Aurobindo Pharma, Divi's Labs, with reasonable exposure within the pharma chemical basket, are doing very well for themselves. And SRF also, for example, is one of the top gainers within that basket. And then you've got the likes of a Gokaldas Exports, a Wellspun Living, and all of those stocks and within the textile basket, which has done very well. We spoke to the management of Trident in the morning as well. That one also doing very well for itself. Gokaldas Exports locked on a 20% upper circuit, 12% higher on a Trident. So we've seen really strong moves across all of those counters. So yes, pharma, maybe a bit of textiles is where the tilt of the market is in terms of preference and in terms of the big moves. Now let me go across to Rabinder, who's here with all of the stocks that you need to keep on your radar. Again, on the back of everything that's playing out in the markets. Rabinder, your top performing stocks today?
Well, as textile stock is in buzzing, and on the back of the India and US trade deal, where US has reduced the tariff to 18% from the 50% earlier, and back of this, all the textile stock are buzzing, and major textile stock are up 20% with the upper circuit. Apart from this, KC International is also in focus on the back of the order where company has win new order worth of rupees 1,020 crores. So back of this stock is in focus, and the KC International is up approximately 1%. Indian Hotel is also buzzing on the back of the positive brokerage note, where Goldman Sachs has come out with a note on Indian Hotel, and they have initiated coverage with buy rating and target price rupees 800. So back of this stock is also in focus. AB Capital is in focus, where board of director of the Aditya Birla Capital and Aditya Birla Housing Finance Limited has approved a proposal for a primary capital infusion of rupees 2,750 crore in Aditya Birla Housing Finance, which is a wholly owned subsidiary of the Aditya Birla Capital from the Indriya Limited, which is one of the entities of Advent International international, and the completion of the transaction is subject to shareholder approval, regulatory approvals, and the other customary condition. And the transaction values Aditya Birla Housing Finance at 19,250 crore. And upon completion of the transaction, Aditya Birla Capital will hold a 85.7% stake, and Advent will hold a 14.3% stake in Aditya Birla Housing Finance. Spark is also in focus, where a company has announced receipt of priority review voucher associated with SEZAB's approval. So back of the Spark is also in focus. City Union Bank is in focus on the back of the strong set of number in Q3 FY26, where in Q3 company's total income saw an uptick of more than 5% on a sequential basis, and NIMS has also improved by to 26 basis point on a sequential basis. PG Electroplast is also in focus on the back of the strong number, where in this quarter company's revenue saw an uptick of approximately 46% year-on-year basis, and profit also grew by approximately 57%. And Adani Ports is also in focus, where on the back of the good set of number, and company has also revised the FY26 guidance. And revenue in this quarter, Adani Ports reported a revenue at rupees 9,705 crore with an uptick of 22% year-on-year basis. And for FY26, management has revised the revenue guidance of rupees 38,000 crore as compared to earlier guidance of 36,000 to 38,000 crore. So back of this, Adani Ports is also in focus.
Fantastic. And Adani Ports is the top performer on the Nifty today. Thank you so much for that roundup, Rabinder. Kunal, let me come to you. First off, your take on today's move and the sustenance of that move, right? The more important part was the move was anticipated, but would it sustain? And it has sustained.
Yeah, it has, Harsh. Good afternoon.
Good afternoon.
So I think, with the Nifty hovering around this 25,750 mark largely throughout the day, I would actually term this as a good positive for the index. The good part is that the market breadth started to open up a little bit, even though I think you've probably seen few large cap names, few tier 2 large cap stocks, mid cap names, they could probably have ebbed off from their opening highs. But that's a normal course of price action, which we see. What matters over here now is for the index to just about hang around to this 25,750 levels. Say not just today, but I think over the next remainder part of this week, you would need strong sector push, which I think is a pattern which we need to look out for. So far, I think the heavy lifting has been done with the likes of banking, metal, few of the energy stocks, etc. Adani group of names, they have done fairly well for themselves. So it's a larger, a more segregated group of stocks which have looked a little bit more better today. But we need to see those patterns emerging, that there are some strong sector push. If that pattern plays out, say over the next couple of days, then I believe that the market could probably gain further more steam, and we could be in for a break of the 26,000 mark as well. But I think that pattern on the sector front is something which we need to watch out for.
Right. Kunal, so therefore, while we await that to play out, what should one bet on?
See, I think, of course, looking at the breakouts and the kind of strong breakouts, I would continue to be bullish on Oro Pharma. So that would be the first recommendation which I would suggest at current levels. The stock is trading at 1230 levels thereabouts. So I think on the spot basis, would look out for targets in the range of 1300 for Aurobindo Pharma. Stop loss could be kept at 1200 mark. The second could be more of a contra buy. It's a contra buy on Tech Mahindra, because the stock is trading now I think closer to the day's low. But it's been one of the better performing stocks from the entire IT pack. And I would sense that IT should play a very strong role going forward in terms of price action. So look out for Techem as a buy. Targets to be kept at 1800, stop loss at 1700.
Okay. Now, in terms of one of the other movers, but not in tandem with the markets, Kunal, firstly, thank you for those picks, is PB Fintech. It plans to raise funds via QIP, and it's subject to shareholder approval, of course. We caught up with the chairman and group CEO, Yashish Dahiya, is also the co-founder, of course, on the usage of the proceeds and the way ahead with regard to the company. Listen in.
Should we get board approval and should we get shareholder approval and we finally do the QIP, the objective is international M&A, and the classification is very clear. We're looking for large established markets with large pools of profit and stable markets where we believe, because of our unique skill set, we have a transformation capability. However, even if the transformation capability were to not work for whatever reason, the profit pool and the stability of the business is still there. The second thing we are looking at is familiarity with the territory and familiar and the confidence in the transformation. I think we have a high degree of conviction that with whatever we have learned at Policybazaar in the last 17 years, we can bring a lot of learnings, specifically in complex products like health insurance or life insurance, to the to the table, and we will do that. The last thing is India being a MNC hub for digital businesses. I think its time has come. Eventually we have to. Why should only Google and Facebook from American companies work in other markets? Why can't Indian companies operate in consumer markets of other countries? And a lot of that IP which is going to be developed, why can't that reside in India? That is also one thing that drives our thesis.
But you've already got, sorry for pursuing this, but you've already got 5,000 crore of cash. So largely you're trying to look at an acquisition which is larger than the cash pool that you have, or is there a deployment strategy for the cash pool you have already and the incremental QIP proceeds will go towards international? I'm trying to get a sense of that.
We don't have an identified target yet.
Got it.
But yes, we do believe we will require that money. We may also require further debt in addition to that money. So yes, I think if we were to move ahead in those geographies that we intend to, then the money would be required. That's precisely why we are raising it.
Okay, welcome back. And joining us at this hour is also Sudeep Bandyopadhyay. Of course, Kunal still with us. Sudeep is market expert, as everyone well knows. Kunal, let me come to you though first. And, we spoke with PB Fintech earlier today. The stock is down 6% on the back of good numbers. Still, the stock is down, likely because of two reasons. One, there is a fear in the market. And Sudeep, I'll come to you on the fundamental side. One, there's a fear in the market that take rates might come down for PB Fintech. So that is one. Take rates is nothing but the commission rates that they earn. And second is the fact that they're going to invest 5,000 crore plus, which is they're going to do a QIP as well, to invest in international markets. Now, this could well be a positive lever, but markets obviously not perceiving it so, because we're still just about turning profitable where PB Fintech is concerned. That's my reading of it. I'll come to Sudeep. Kunal, with regard to your view on charts, how is this one looking?
See, many a times you have to try and judge the view on the stock with respect to the overall market. So there is like a 30% to 40% weightage, which we generally give when the overall market scenario. A few days back, maybe last week or so, when we were discussing about PB Fintech, the charts were really disappointing because the stock was going into the results as well as into the budget on a much more negative note. Now today, after this 5-6% kind of a gap down or a downtick move for PB Fintech, the volumes being on an extremely high side, it looks like that the stock is now nearing a major bottom for itself. I would believe 1400, 1450 should be a good zone where traders could look to start accumulating PB Fintech, and it's a good time to try and go contra, because after this kind of a 7 out of the last 10 weeks negative price performance and the stock correcting from 1900 levels to now 1450, 1470 plus kind of a mark, I think it's going to be a very good price territory as well as a risk reward to initiate a buy on PB Fintech.
Sudeep, what's your view?
Well, the market is definitely worried. Whenever a company talks about investing big amount in the global markets, I think market takes it with a pinch of salt, and that's exactly what is happening. Deploying 5,000 crore plus in the global market, I think is a completely uncharted and unseen territory, which it's definitely a matter of concern from an investor's point of view, and that's the reason why it's coming down. The take rate coming down and other things are well known, and that's pretty much manageable with the volume increasing on a continuous basis, and scope for volume to go up from here on also significant. I don't think that's a matter of concern. What is a matter of concern to the market is the plan to invest in global markets. I think that's definitely a matter of concern, and I'm not sure why the company is doing it, because as you rightly said, they've just turned profitable. There is significant under-penetration of insurance in India, and the Indian market is, needs to be captured in a much better manner before there is a need to really look for markets outside of India. I was hearing, the views of the management that they need to be in global markets just like global companies are in India. All that is fine, but is the timing right? Are we ready for that? Do we need to deploy that kind of cash outside India? I think those are the questions which the investors are grappling with.
Yeah, absolutely. And yes, so that's the view coming in from Sudeep, of course, with regard to what he believes from a PB FinTech perspective. But Sudeep, if I can just extend that question maybe a little bit more. Is this, so market is clearly concerned, and which is why the stock is down 6%. Now, this is a 65,000 crore odd market cap company now. Looking at a profit after tax number of around 1,000 crore by FY27, which leaves it at around 65 times. And it's not growing at a very slow pace either. So, and they've said acquisitions will be EPS accretive for them. So it's not like the acquisitions that they're going to make are not going to be EPS accretive. So you're looking at a base level price to earnings ratio of 65 times, fast growth business. Would you believe that it's a good time to enter? I understand your view that you're not sure as to why they're diversifying, but EPS accretive transaction, if they are assuring, would it be something that interests you?
Well, Harsh, look, Reliance sometime back, if you recollect, I think in the AGM, last AGM, had talked about Reliance Jio getting into Africa. And the share was beaten down. Investors were nervous about Reliance, which is a behemoth with piles of cash at their disposal, and their entry into Africa to compete probably with the local players as well as Airtel was looked down upon by the market as a big negative. So from a PB FinTech point of view, naturally this will look upon as a negative development, and the market will not like it. It's obvious. But having said that, to your specific point about acquisition being EPS accretive and things like that, that's absolutely uncertain. Today, we don't know what is the acquisition target. I'm not very sure whether the company is also aware of any specific target and the transaction. So it's a little premature to talk about that. Yeah, as a policy, if they talk about acquisition only being EPS accretive, I will probably still live with that. But again, I will say that there is enough and more opportunities in India at this stage as far as insurance distribution is concerned. There are stages of development which the company needs to go through before venturing into global markets. And I would say that the multiple is not it's not a very cheap multiple. It's at a significantly elevated multiple at which the stock is quoting. So the margin of error is very, very limited. So I will be extremely cautious with this planned international foray.
Excellent. Sudeep, made for a very good discussion. So thank you for that. Sudeep, I'll come straight back to you in a bit, but let's bring on board Rahul Chadda as well, founder and CIO at Shikhara Investment Management. Rahul, it's been a while, so great chatting with you. Let me get a sense of how you're looking at the market moves today, and what are the opportunities that you're looking at nitpicking, or have you already nitpicked it a couple of days ago during that bit of correction that we saw on budget day?
Yeah. No, clearly, again, look, Indian markets were in a buy zone. What we were seeing was a classic retail peak. Over the last 2, 3 years, we had huge amount of retail money which had come in the market. People had not made much money for the last 12, 18 months, and which is where this capitulation was happening. The sentiment, I was in India recently, and the sentiment was extremely downbeat with investors, with corporates, etc. So I think that's where this framework for US-India trade deal removes that big overhang. From a FI perspective, what was worrisome was rupee. Look, we all know that rupee depreciation was kind of an affected to give some export to the exporters. But as an outsider, when you see most currencies appreciating 5 to 7% against dollar and rupee depreciating 5 to 7%, I think that was something which was keeping the foreigners at bay. So now with that kind of an overhang behind us, I think foreign investors would look more constructively at India. What we are expecting is in the coming quarters growth to pick up. We've already seen from a regional perspective, look, it's basically Korea which is well. Growth is still tepid in China. So I think as some of these overhangs get mitigated and earnings kind of improve, you should see more FI inflows in the country.
Uh, uh, Sudeep, one quick question. So we've seen markets now quite buoyant. What do you buy at this point? There's certainty now, both on budget as well as on India US and India EU as well. What are the opportunities you're looking for? What are you hunting for at this point, Sudeep?
Well, I think if you had to look at trade deal dependent stocks, I think that boat has sailed already, and things have really hot as far as those export oriented sectors. So I definitely don't want to buy those stocks today or tomorrow maybe. Let things settle down a bit. Only then we should look at those stocks. I will probably stick to my old favorites like frontline large cap stocks like a Larsen to Grow, like a Bharat Forge, because they have a developing very well developing defense business inside them, and the budget did give a lot of allocation to defense once again on the expected lines. I will definitely look at chemicals and agrochemicals and specialty chemical space because I think beyond the fact that they were beaten down mercilessly over the last 2 years and the performance was horrible, I think things have started improving generally, and the trade deals, getting done definitely helps these companies. The China plus one logic continues to remain valid. So, from a long-term perspective, I think agrochemicals, chemicals, specialty chemicals, these definitely should be looked at. And some of the leaders in this space, whether it's a UPL, whether it's Aarti Industries, whether it's SRF, can definitely be looked at from a long-term hold point of view.
Okay, Sudeep, thank you so much for joining us. We'll let you go on that note. And that's, of course, Sudeep Bandyopadhyay with regard to his views. Kunal, let me come back to you. Realty, it's done ever so well. It's held up very, very well for itself. Is this a sector which continues to look interesting? I know your top pick is DLF within that realty pack. But talk to us about what levels one should anticipate going forward in the short term and in the medium term, where some of these names are concerned.
See, I would believe now that realty as an index would look fairly attractive on two fronts. One, of course, on the price front, because for the calendar year 2025, realty, if I'm not wrong, was one of the worst two underperforming sectors as such. Then you start off 2026. The realty index actually fell by I think more than 10 or 12% from its immediate highs. So I think that was also one of the key points. What this brought into was a point where many of the real estate names, large cap names like DLF, Godrej Properties, the mid cap end of the real estate stocks, these stocks are now at a divergence of almost 10% to broadly even 20%. Some of them were from the long-term moving averages. That throws in a good opportunity to try and go for a good risk-reward trade. The other and the most interesting part is when markets try and come back, when the news flow starts to become a lot more better. So we say that the ground is for the market is a lot more better and not shaky as maybe in the last few weeks, few months. That probably props up the sentiment from a trader perspective, and that sentiment increasing up higher generally calls in for a better risk appetite, and in those time frames the high beta sectors, they tend to do very well. So broadly would expect the realty index to continue to move up higher. DLF from current levels, I would look at 675, 680 as a target. Godrej Properties, after this 8% kind of a move, I would expect potentially another 7 to 8% climb up over the very short term.
Wow, so very, very bullish with regard to Godrej Prop. Nearly 9.5% move as we speak on Godrej Properties. Now let me come to you. Is realty something which is looking good, good value, low hanging at this point, and where risk reward is really favorable in your opinion from a funda perspective?
Yeah. See, we had a lot of realty names coming out of COVID and made a lot of money in that. But over the last 12 months, we've been booking some gains there. I think this whole impact of AI disruption, not enough white collar jobs being created, would be felt on reality. And look, this is a sector which has done well, well known. Affordability is not bad, but not as compelling as it was 4 or 5 years back. So I think we would look at sectors other than reality. Reality, there would be kind of a technical bounce here. But outside that, we'll be more focused on some of these manufacturing export stories. Now that this overhang with India US is behind us, we've got an India EU kind of a trade deal also. Some of these manufacturing companies in auto and etc., which are supplying to these regions should be positive. And then some of the good consumption names, Eternal, etc., discretionary consumption, they've corrected fair bit. I think these names offer a favorable risk reward for medium term investors.
Okay, what we'll do, Rahul is slipping to a very short break. We'll continue conversation with you on the other side. I'd love to chat more with regard to sectors and pockets that you're liking. Stay with us, viewers. Right, welcome back. And some big movers in trade today. Both the Adani twins, in fact, are the big movers. 9% higher on Adani Ports. They've said that their top line will come at the higher end of the guided band that they've given. And Adani Enterprises also up 11% in trade. So those are the two names that are really shining. No losers on the Nifty 50 index, or just about fluctuating. Maybe Tech Mahindra absolutely flat, maybe slight negative bars, but outside of that, no losers on the Nifty 50. It's a very, very solid day of trade. Rahul, let me come back to you. One stat that's gotten buried on the back of the budget plus the India-US deal is the fact that credit growth was extremely strong in the month of January. In fact, we saw 4% MOM growth. In the month of December. This is basis RBI data that came out. There was 4% month-on-month growth in credit in the month of December. So we've seen very strong tailwind. How would you play that? So within financials, how are you playing this?
So again, for this improvement in the recovery or the credit growth, one would look at that through banks, private banks, some select NBFCs, some of the mid-cap banks like AU banks, etc. Is through how we're playing this. And then what the credit growth kind of signifies is pickup in the economy. So you've got equally strong leverage, which comes through some of the select consumer discretionary plays I was talking about. Some of the industrials, I think we're a strong believer of a new industrial cycle. The last time we saw this cycle was 2007, and it's nearly 20 years of underinvestment in the world. So you look at the huge demand which is coming for investing in the power infrastructure, investing in the defense sector in Europe, that's huge. And I think that's where opportunity opens up for some of these Indian companies who are exporting there. Plus, locally also, with this trade deals happening, our sense is private sector confidence should come back. See, there was clearly a lack of confidence. People were just holding back, basically. With some of these uncertainties out of the way, and government encouraging local investments, etc., you should see pickup. So industrials is a sector one would closely watch here.
And Rahul, if I can switch back to the trade deal itself, of course, a big positive. There's no doubt about that. But could there be negatives? Like, for example, if there was a 0% tariff on goods imported into India from the US, could it be substantially negative for, say, auto companies?
Absolutely. See, I think auto stocks in India are clearly expensive. And why we say that is across the region, you've got the likes of BYD, again, other Chinese companies like Hyundai Motors, the parent, who are trading at 5 to 10 times earnings, basically. And they have core skill sets which are much better than some of these Indian companies. So if the duties get reduced, look, auto sector is something which would be negatively impacted, which is why we've not engaged or we're not invested in many auto companies here. But look, there are going to be winners and losers. But overall, again, these trade deals are healthy for the economy, and I think that's what we should focus on.
Okay, and OMCs as a pack has done very well again. And Rahul, they've done well, yes, but there's also the analyst community, at least a certain cohort, which sees potential upside even from here. Does that, or I don't know how you view it, but would that thesis, if you view it that way, would that thesis change materially given the way in which the trade deal is likely structured? Of course, the fine print is still awaited.
OMCs were defensive play because there was not much happening in the economy. People were not in the domestic cyclicals, or people were not looking at the growth names, which is where money was hiding in these cheap value OMC names. Um, Growth's been always an issue in these names. These are more of a trading place. You buy them below book, kind of, and play them for a little premium to the book and then move to something else. We would look at more structural stories. Now that those big overhangs for the growth are behind us, over last 12 months, you've seen a lot of action by the government to kickstart the growth. See, unlike 2024, where it seemed like the administration, the Indian administration was more complacent about growth, were focused on other things. 25 is where you've seen all the eyes on kickstarting the growth, on getting the business consumer confidence back. So as the growth comes back, money is going to move out of these defensive sectors like OMCs, etc., and go to growth sensitive sectors. And globally, our view also is that we are not too bearish on the world. You had consumers, businesses holding back last year because of all that trade uncertainty which was going on. As that uncertainty recedes, business should kind of invest more, economy should improve from here. So we would be constructive in our portfolios here.
Excellent. Rahul, this has been a very good conversation. I know that we've broken this conversation up into a few parts, but we've gone through with it nonetheless. So thank you so much for joining us this afternoon.
Thank you.
All right, and now on to an exclusive conversation with Jeet Adani, the director of Adani Airports, had with ET Now. He lauds the government on the successful deal with the US. Listen in.
So the vision, I think, is pretty clear. We want to create global capability within the country. We want to, create aircraft, both fixed wing and rotary wing, not just for our own people, but also to export to other countries in the region. And I truly believe that we have the talent, we have, the expertise to be able to do this. And now finally we have partnerships which allows us to do this much quicker than we could have done, if we had to do it ourselves. And it's a great thing we found partners who believe in the shared vision.
And you were also speaking about the local value addition. Just so
Yes,
one
absolutely.
quick comment on the US-India trade deal, which has been struck in terms of what it means for both the countries.
Like I said, I mean, things are yet to play out, but I think it's definitely a great positive. The US has been one of our important partners over the couple of years, and it's great to see that whatever the rhetoric has been, it's not affected the resolve of both the countries to work together and to progress towards further.
Welcome back. You're watching Closing Trades here on ET Now. I have with me Mr. Keshav Bhajanka, who's the Executive Director at Century Plyboards India, to give us his views on the trade deal itself and what it means for Indian industry. Keshav, let me throw it open. Of course, it's come as a positive surprise for markets, for all of us here. But talk to us about what this means in the larger scheme of things. How are you seeing it?
Good afternoon. Thank you
Good
so
afternoon.
much for having me on the show. I
Great having
think
you,
that
Keshav.
this trade deal truly reflects the strength that we have as an economy. I think it is a message globally that India cannot be ignored any further. It is a very, very positive sign, of course. And I think that going forward, new avenues for trade are opening for us daily, whether it is the free trade agreement with the EU, whether it is Australia, now the US, and so on and so forth. I think this deal truly shows the way in which we as an economy now represent a huge chunk of global trade. And going forward, this will be greatly beneficial for our sector and for the economy in general.
Keshav, I know that for Century, this is a very small component, which is exports. would a potential opportunity to the US at all open up, or in your space it's tough to do that?
The US is one of the largest markets in the world when it comes to most things, including for our
Yes.
products. So, laminates, one of our product categories, we're already exploring exporting to the US in a big way. I think that for the past few months, due to the uncertainty, talks had stalled. But I think this opens up a fantastic avenue for growth for us as far as laminates is concerned. And in other product categories as well, there is tremendous potential. Of course, we will have to work out the feasibility based on the higher freight costs and so on and so forth. But I think the US as a market is the largest in the world still. And this trade deal opens up new avenues for us. The extent to which we'll be able to capitalize on that depends on the profitability and the viability. So we'll have to explore that going forward.
But Keshav, you would have done some back of the envelope math, and to that end, I'd want to understand whether how is India or how is Century Ply in particular placed versus some of the other competitors in the US, already existing players. How are you placed? Because this 18% tariff will still be applicable. I'm trying to understand whether the tariff rate gives you a leg up versus some of your competitors.
Definitely. I think the effective tax rate for China will still be well in excess of 30%. Alongside that, amongst most of the growing economies, we would be at the lowest tariff level of 18%. So I think this will give us a leg up. And as a country, we have been exporting to the US, maybe a little lesser so in the case of Century. But going forward, I think we see a lot of avenues for growth, and we will definitely look to encash on the same.
Okay, Mr. Bhajanka, thank you so much for coming in and giving us that perspective on such a critical day.
Thank you.
Markets up 3%, and therefore kind of gives you a sense as to how Indian companies are starting to look at the US more seriously. Even those not having a presence starting to consider US for viability on a day like this. So clearly positive with regard to both the sentiment as well as the way in which businesses are looking at the US. Now, Kunal, let me come to you, especially with regard to some of the textile names. We've seen a runaway rally in at least some of the names, Gokaldas Exports, even within the chemicals basket, in fact. What does one do at this point? Should you book profits? Should you hold on? How should one look at it?
See, I think it's a good time to actually initiate a buy into many of these play, because you don't have to look at this in the context of the one-day rally for these stocks, but you have to look at this in the context of what happened in 2025. For example, Gokaldas Export, a stock which was almost at 1200, 1250, end of 2024, start of 2025. From there, the stock had fallen down 50%. So from 1250 levels to, I think, around 550, 560 mark, which the stock made a low yesterday or day before. And now it's come back towards 675, 690 plus kind of a range. So I think in the context of what the stock has lost in the last one and a half odd year, this could be maybe a starting point of the change of trend for these names. Same is the case with other names like Welspun, Living, etc., where many of these stocks have fallen down by 50% and more. So I think in that context, you have to look at this as a trend-building rally for many of these names. Yes, you might have a phase where after this 15%, 20% kind of an up move, these stocks may do literally nothing for the next few weeks. Broadly just about hang around to a consolidative range. But then you have to look at this as more of a long-term kind of a holding and try and use dips as good buying opportunities.
Okay, use dips as buying opportunities. What Kunal, within the textile space do you like? What would you buy? Give us stocks. We spoke to a Trident this morning. You were there with us, I believe. But we spoke to Trident this morning. Which are the counters which are looking good on charts now, given the move now?
See, I think there are two names. Welspun Living, I think even at current levels, yes, I believe looks fairly attractive, because over the last 1 year broadly, 2025, Jan, Feb, somewhere, the stock was trading to a band of 110 to 150. Of course, it's a huge band of consolidation. But when you look at the longer term charts for Welspun Living, that's a chart which I believe looks quite strong. It's coming out of that breakout, this major bands of consolidation. So Welspun Living, I believe, could be a good bet on the short-term basis as well as on the medium-term charts. I would expect the stock to come out of this range of 145 to 150 on the Wellspun Living chart. And then on the other hand, I think Gokuldas Export, as I just mentioned, the stock after a 50% kind of a cut from 1250 levels to current levels of 675, 695. I think this is a good price territory to go for a buy. I would look out for potentially 18 months kind of an upside target for these names. Broadly another 15% to 20%. Of course, I'm giving it more time so that these stocks underperform, and in case if there is any kind of a corrective wave, try and take advantage of that as well.
Okay, I'll wait for the chart of Wellspun Living to come up on our screen. I want the chart of Wellspun Living, please. Let's wait for that one to come up. Kunal, you clearly seem to like this one, 19.5% higher. You can initiate a position on this one today because we've not hit upper circuit. What levels would you look out for where a Wellspun Living is concerned?
See, I think it's a 30-point breakout for the stock price in a range. So which means from current levels, we could be looking at 175-ish kind of a target.
Okay, 175 on Wellspun Living is what Kunal is penciling in. But let's in fact shift to the second top Nifty 50 winner today. Adani Enterprises came out with numbers, but it's Adani Ports which we will talk about for just a bit. And how have the numbers been this quarter? Well, we have with us Ashwini Gupta, the whole-time director and CEO of the company, to give us insights into the earnings. Listen in.
Hello, and thanks for allowing me to share APSEZ's Q3 FY26 results. As India's largest and world's fastest growing integrated transport utility, APSEZ has once again demonstrated exceptional performance and continues to build on its legacy of creating shareholder value driven by responsible capital allocation, operational efficiency, and elevated customer experience. During the quarter, APSEZ's revenue grew 22%, driven by growth across all business verticals. Logistics and marine business grew 62% and 91% respectively. International operations crossed the rupees 1,000 crore quarterly milestone, and domestic ports grew in mid-teens. YTD FY26, we continued to gain all India cargo market share, including the highest ever container market share at 45.6%. Importantly, we focused on profitable growth. During the quarter, marine and international ports EBITDA more than doubled, and logistics and domestic ports EBITDA grew 26% and 15% respectively. Driven by all-round EBITDA growth, I am delighted to increase the top end of our original FY26 EBITDA guidance by rupees 800 crores. We have a massive focus on capacity expansion. We recently closed the acquisition of the 50 million ton per annum NQXT Australia terminal. We have multiple initiatives underway across our Indian ports, including rupees 16,000 crore Vizhinjam Phase 2 expansion, liquid and container terminal in Mundra, expansion at Dhamra, Ennore, Kattupalli ports, and new Haldia terminal. We are increasing footprint of our asset-light logistics services to cover more trucking routes and higher international freight forwarding volumes, along with expansion in physical logistics network. Marine is another area of focus where we are adding vessels in the Middle East and Africa waters with definitive customer contracts. While pursuing large-scale expansion, we remain focused on responsible capital allocation and balance sheet strength. During 9 months FY26, we generated healthy operating cash and kept our leverage under check to below 2x. Moody's has revised its outlook on APSEZ to stable from negative while reaffirming its ratings. And moreover, Japan Credit Rating Agency assigned A- /stable rating to APSEZ a notch above India's sovereign rating. APSEZ continues to set the benchmark for operational and sustainability excellence. Mundra became the first Indian port and among few global ports to handle a very large crude carrier that berthed directly at a jetty. APSEZ became India's first integrated transport utility company to adopt the TNFD framework, which is a global benchmark for responsible infrastructure development. Looking forward, we remain firmly on track to achieve 1 billion metric ton of cargo volume and our FY29 targets of 65,500 crores of revenue and 36,500 crore of EBITDA. I take this opportunity to thank our stakeholders for their invaluable contribution to our growth trajectory.
As India and the US negotiate a trade framework that could reshape manufacturing, metals, strategic supply chains, the key question is, of course, what next? Is it just about access or is it about leverage? And today I have with me a very special panel which brings together India's industrial leadership to assess whether the deal strengthens India's bargaining power or locks the industry into a tougher global condition spot. Joining me today right now, Mr. Anand Goenka, President FICCI and Vice Chairman RPG Group, Mr. Subrakant Panda, Past President FICCI and MD Indian Metals and Ferroalloys, and Mr. Vijay Sankar, Senior Vice President FICCI and Chairman at the Sanmar Group, joining in on the show right now. Gentlemen, great to have you all on the show. But Anand, let me first start off with you and let's talk about strategically how critical was the signing of this deal between India and US. The fact that we've come to an agreement now, more strategic than commercial, you would think, at least to begin with?
Absolutely. I think it brings about, takes away a level of uncertainty that was there in industry. There was always a little bit of a cloud in the last year saying that this is one thing that we still have to fix. And with this now going away, I'd say there's been a slew of positive news that has come in this month. We had the EU FTA, a very positive and strong budget, and capped with the US trade agreement certainly brings about a lot more positivity in the mood of the industry. On top of that, I would say the big benefit also comes in towards bringing about more stability and strengthening of the rupee, which has been depreciating. And that has other positive psychological effects, FDI interest into the country as well.
Anand, from an RPG perspective, you know, the large group perspective that you would share perhaps, can India afford to open markets without reciprocal certainty on tariffs and non-tariff barriers? I mean, you know, just strategically, how tough was the last 1 year to deal with this kind of an overhang?
I'd say overall exposure to the US from an export perspective has been limited. So to that extent, business has not got affected. I would also say there's a fair amount of complementarity between developed countries and developing countries. They have certain levels of technology. Of course, their cost of production, etc., is much higher. We have cost advantages as well. So to that extent, there is very limited impact that we found as a group. The areas that, of course, got affected were textile, apparel, gems, jewelry. So to that extent, as a group, there was a small section of tires for Fiat that we had to stop exporting, and that will start soon again. But beyond that, not a major impact.
But tell me, just narrowing it down for the industry or India Inc. Anant as a whole, are Indian businesses aligned on this deal yet, or are sectoral interests, still pulling negotiations in different directions?
It's too early to say. I don't think we have details of the fine print as to what really some of the statements on the tweets mean. For example, what does it mean that India is giving zero duty? Does it apply? I wouldn't take it fully at face value and would like to understand a little bit more. I think where the opportunity does arise is that it is very important and for Indian businesses to go global. And in our case, we were looking at the US market as a high important future growth market. And this deal gives us more certainty that, yes, we can pursue it with higher speed, which we had slowed down in the last year.
Okay, Anand, great to speak with you. I believe you got a rush, so I'm going to let you go on that note. Thanks as always for speaking with us. Mr. Panda, if I could come to you to give me the metals, commodity and heavy industry aspect. Metals face carbon norms, traceability rules and trade remedies as well. Does this deal now significantly ease access to the US or raise the compliance bar further, you think?
So again, that's a difficult question to answer, Aisha, because we don't have enough details at this point in time. From what I understand, this is broadly speaking an agreement to bring down reciprocal tariffs from a punitive 50% to 18%, which makes it, which makes life a lot easier for some of the sectors which took a little bit of a knock, over the last 6 months or so. But
Okay, you can catch that full conversation later in the day on ET Now. And Kunal, let me come to you. With regard to the moves, especially on an Adani Enterprises, on an Adani Ports, it's a very strong move that we're seeing today. Let's talk about ports first. 1530 is not a level we've seen in a while. What does this mean in terms of the stock, and what are the levels now that you're looking for?
So this reverses the entire move which happened, I think, a couple of months back for Adani Ports, if I'm not wrong, when there was this negative news flow surrounding US for the stock price. And I think, if I'm not wrong, on that single day or maybe in the next in the series of the next couple of days, at that time, these stocks corrected by 10% to 15% margin. So it reverses the course of that kind of a price action day for almost most of the Adani group of names. And for Adani Ports specifically, after this breakout of about the 1500 levels, this indicates that we are looking at a potential breakout of even a lifetime high for the stock price. I think that level is around 1560 odd for Adani Ports. I would believe that this could be a good potential up move, even from a short-term play. So you might look at, say, 1560, 1600 as a near-term target. Maybe the stock might take a pause over there for a few odd weeks before it tries to move up higher. But this could be a potential and a very strong breakout move for many of the Adani group of names, including Adani Ports.
Okay, so that's the take coming in where Adani Ports is concerned. All right, so that's of course one of the Nifty names, but I want to also take your view, Kunal, on some of the names which have underperformed over the last month or two. Bajaj Finance, for example, is up nearly 7%. Interglobe Aviation is up 5.5–6%. Not seen this kind of move on any of these counters in a very long time, in fact. And not even seen these kind of prices. In fact, Indigo has only weakened since November of this year. Talk to us about whether any of these are at an inflection point of sorts.
So out of the two names which you mentioned, Bajaj Finance definitely is, because what had happened was post the recent correction for the stock price in the last couple of months, the stock had broken its long-term moving averages. That was around 975 odd mark for Bajaj Finance. And post that, the stock had, I think, it fallen down to as much as 900 or sub 900 levels also, if I'm not wrong. So there was a sharp correction, time-wise, price-wise correction. Today, after this breakout, for the stock, trading about 950 levels, it's come back above its long-term moving averages. So which means that it's at an inflection point where the stock could probably try and reciprocate what it did on the negative side. I would believe that it should be good for a breakout further towards 1020, 1025, at least over the near to medium term, say potentially over the next 4 to 5 weeks. So I believe that could be a good stock to look out for from the large cap names, which was an erstwhile underperformer. Interglobe Aviation, I would still maybe give it another couple of weeks before the stock shows signs of a breakout, because the stock is still trading sub its long-term moving average. Today, the stock has come back towards 4,900 plus levels, but it's still shy of the immediate resistance. That level, I think, is around 5,050, 5,100 for Interglobe Aviation. So I'll probably give it another week or so. If the stock happens to come back above 5,150 levels, that could be a point where maybe we'll initiate for a buy on Interglobe Aviation, expecting that maybe the worst could be probably priced into the stock price.
Okay, interesting. So that's with regard to Interglobe. What about the private sector banks, Kunal? You've been positive with regard to those, to that entire pack, and Axis and HDFC Bank, all of them seeing decent moves, but to some extent underperforming the index itself. Is this where some of the rally might actually come in going forward?
Yeah, it looks like, Harsh, because see, over the last 2-3 months, when you look at a move of 1440, 1450 flatline, 1340, 1350 flatline for ICICI Bank, a 930, 950 range for HDFC Bank, it's been absolutely flat as such over the last 2-3 months. But then I believe that this time-wise consolidation is actually a very good zone for these stocks to try and recover, because in the last 3-4 months the news flow has been extremely negative for the private sector banking names. We saw many of these private sector banking stocks coming sub their 200 moving averages, but this could be a point where the market gains confidence. The PSU banking stocks have done their lot over the last 6-8 months. Private sector banking stocks could make a strong comeback. So bullish on the entire pack. Specifically from current levels, if I have to initiate a fresh buy, I would consider looking at the likes of Axis Bank, which continues to be strong, about 1300 levels. ICICI Bank, the stock nearing the 1400 break. HDFC Bank also at current levels looks fairly attractive.
Okay, all right. So that's with regard to the banking pack. ICICI largely in line, HDFC slightly softer than how the Nifty is doing, maybe 0.5% thereabouts. But nonetheless, 2.2%, the moves are large. We also have Sumita in an exclusive conversation with Vijay Kumar, who's the Secretary, Ministry of Ports, on his overview of the budget and its impact on the shipping industry. Let's listen in.
Based on number of studies, number of discussions and cost comparisons, roughly per container cost differential comes in the range of about $500. So the exact figure is yet to be finalized. We are still working out, still refining it. And I think we should be ready to launch the scheme within next 2 to 3 months.
So my second question is related to BCD reduction that has come in the budget for multiple sectors, whether it's related to electronics, the nuclear sector, and even the solar sector. Now, I'm pretty sure that exporters must have come to you, given the kind of trade disruptions that we've seen over the past couple of months. How do you think these measures are going to sort of reduce the compliance burden on exporters?
So basically, a number of products, number of inputs which are used as a part of a maritime ecosystem. So number of concessions have been given, number of concessions have been extended, so which will help in building a robust ecosystem for maritime building of ships, for maritime components also, and yeah.
Right. So what is your plan to sort of change customs processes to aid exporters, and what are the timelines that you're looking at?
So basically, we've got a very ambitious program called One Nation, One Document, One Nation, One Process, under which all our ports are working together with customs, with immigration authorities to streamline the processes. Already number of achievements have been made. We have achieved about reduction in documentation of about 50%. We have reduced number of transactions also. So I think a lot of progress is already being made.
All right. So that's, of course, from the Ministry of Shipping. But Kunal, let me ask you with regard to a Trent Is there a view that you have? Because you will have numbers come in over the next day or so. What's the sense like?
I would still believe that long-term wise, this range of sub 4,000, I think is still a very attractive range. Maybe I think what could happen is that if in case the stock, say, corrects marginally another 100, 150 odd points post results, I think I would actually believe that that's a good zone to try and add up, further positions over here. Because, after a 60% plus kind of a correction from 8,000, I think 400 or 500 was the high for trend in 2024-25. From those kind of zones, the stock has corrected more than 50-60%. I think in that context, the worst seems to be now behind. Yes, there could be more residual correction which could happen to the stock price. But if I look at this potentially over the next 12 months, 18 months plus time horizon, then I would believe that these could be mouth-watering opportunities for a longer-term trader investor. So I think at current levels, I would suggest a buy, and specifically the stock dips even marginally further post-results.
No, I mean, we're talking about trend, viewers. So that's something you want to keep in mind. The stock is trend, and those are views coming in from Kunal with regard to trend. Now, let's go across. The government sources suggest that interest of farmers and MSMEs have been protected in the trade deal. Prakash joins in to tell us the contours of the deal. Now, this is very important. Prakash.
Well, that's an important development coming in, as we are learning from our government sources that interests of farmers and MSMEs have been protected under the India-US trade deal. In fact, sources tell us that government's stand has been pretty clear from the beginning that there'll be no compromise on national interests, and the interest of vulnerable sectors will be protected. Sources suggest that this deal will create immense opportunity for domestic sectors. In fact, this is win-win for both countries. Along with that, when it comes to energy security, sources indicate that there will be no compromise on India's energy security. In fact, government will ensure sufficient availability of crude oil in the market for domestic consumers at affordable prices, and world marketing companies will continue purchasing crude from different locations. It is available at affordable prices. So the government is trying to make it clear that the interests of vulnerable sectors, in fact, farmers and MSMEs, have not been, have been protected under this deal. Along with that, since the parliament is in function, and sources tell us that the government is expected to make a formal statement on the floor of the House to clear the air surrounding the deal. Let's see when it happens, but the sources indicate that the interests of farmers, MSMEs, and other vulnerable sectors have been protected. Back to you.
Thank you so much for that, Prakash. Of course, that's a very important clarification that farmer interests will be protected as part of this deal. There's been no compromise whatsoever of that. So that kind of clarifies the agri part of things, right, viewers, to a certain extent. Of course, we'll wait the fine print, which will give us better clarity with regard to what's played out. But we go back to trend, because that's what we were speaking about immediately prior to this coming through. And it's set to report its Q3 numbers. Snehi here to tell us what the fine print will likely look like. Snehi.
Well, yes, all eyes are going to be on Trend's Q3 earnings after the company gave a mixed update in terms of the revenue deceleration continuing, but the store addition for Westside and Zudio continue to look strong. That was their update. Let's understand what these numbers could look like when the earnings do come out on a standalone year-on-year basis. The revenue is expected to be slightly higher than what the management had indicated in its update, an uptick of 18%. EBITDA is expected to go up by 21%. Net profit is expected to see healthy growth of 16.2%. And margins, surprisingly, this time around, we're expecting to see a nominal about a 40 bips hike coming in on the margins. 18.9% compared to 18.5% is something that we're expecting to see the margin figure to come to. When it comes to store openings, in Q3, 17 studios are expected to be added for Westside, 48 for Zudio, taking the 9-month total count to 30 for Westside and 89 additions for Zudio. So the key expectations when the numbers do come out is going to be store addition is expected to aid revenue this time around. The revenue per square foot is expected to decline 11% on a year-on-year basis. Area growth of 36% year-on-year, driven by addition of larger size stores, and revenue growth is expected to rather lag area growth due to the cannibalization deceleration of revenues of older stores by newer stores. The RFID related cost savings and employee costs may prove to be incrementally material to margins despite the weak same-store sales growth that we're expecting to see. So yes, margins, that's the reason why margins could do well in quarter 3. But talking about the revenue deceleration, back in quarter 3 FY25 revenue growth for Trent was 40%. This time around, based on the update that the management has given, it's a 15% year-on-year growth. So that deceleration trend for revenue trend for Trent continues, and all eyes are going to be on that. Other than that, key factors to watch out for when the numbers do come out is going to be the same-store sales growth number, demand outlook in metro, tier 2, 3 cities, cannibalization, if at all, that we're seeing in Zudio, because some brokerages believe that multiple Zudio stores in the same pin code are leading to cannibalization. Outlook on festive season and store expansion guidance is going to be something important to watch out for. So yes, watch out for Trent. Expecting a decent set of numbers, but there are going to be some internal metrics to watch out for.
Okay, thank you so much for that, Snehi. The other one in focus also this morning has been AB Capital. And what's happened there is you've got an Advent which has come in and put in around 2,750 crore, or agreed to put in 2,750 crore rupees approximately in the subsidiary of AB Capital, which is Aditya Birla Housing Finance. Now, that subsidiary, therefore, at the current value, will have a 14.5% holding of Advent post the deal. And what therefore it does is it gives the subsidiary a valuation of nearly 20,000 crores. So that's the kind of stake which Advent has picked up in Aditya Birla Capital. AB Housing, of course, is the one where the stake is getting picked up. It's going to be acquired. And of course, AB Capital is where the value unlock happens, because that's the holding company. Now, of course, we'll try and understand maybe the nuances better as to how analysts have viewed AB Capital and how much of the SOTP value is getting derived from AB Housing. But basically, it becomes, therefore, that much more important to understand those nuances, which I'm sure will come in a day or so. We'll have analysts come in and likely break that down for us. But AB Capital and a couple of other NBFCs, Kunal, you seem positive with regard to Bajaj Finance. How does AB Capital look on charts? I know long term you have a very positive stance on AB Capital, basis conversations that I've had with you. But talk to us about AB Capital short term, along with maybe Shriram Finance and M&M Finance and L&T Finance. Which are your favorites within, and M&M Finance, which are your favorites among this entire pack?
So yeah, I think first of all, the sector is looking extremely attractive. There is no two doubts about it, because you look at so many fresh breakouts which have happened in the last 6 odd months. L&T Finance had a fantastic year in 2025. M&M Finance in the last 6 months had seen a very good recovery from those sub 300 levels, and we saw Shriram Finance also moving up from those 800, 900 ranges to 1,000 plus mark. So these stocks have done phenomenally well. I would probably expect that from here on, short-term wise also, that these stocks may continue to move up higher. Of course, the pace of rally for these stocks should slow down significantly. You might probably expect that AB Capital may hang around to this 345 mark, plus minus 15 odd points over the very short term. Shriram Finance, I would expect the stock to head into a range of 950, 1,020 on the very short-term basis. And potentially for L&T Finance, I would expect 300 to be a pivot range over the very short term.
Okay, Kunal, stay with us. Now, last minute or so to close, the ticker is on the screen. What we've seen is a fabulous day of trade where the index has held up very well for itself. We hit a high of 26,341 somewhere midday through the day of trade. It was a choppy day as well, because markets were trying to find the pockets which are most impacted by the India-US trade deal. But we've settled in 2.5% higher on the Nifty 50 index. So it's a very, very impressive day of trade. 630 points gained versus yesterday. So that's the other positive. 47 Nifty 50 stocks in the green versus just 3 in the red. Adani Enterprises, Pods, Geo Finance, Bajaj Finance, Interglobe Aviation, all gaining over 5% in trade and all being Nifty 50 counters. The only losers may be a tilt towards FMCG with Nestle and then some of the defensives, SBI Life, BEL, which has already done very well for itself, and a Tech Mahindra are the only culprits, frankly, within that Nifty pack. When you're looking at the broader markets as well, a very strong move across the board, 2.9% held by both the Nifty mid-cap as well as the Nifty small-cap indices. When you're looking at it sectorally as well, the move is green across the board, with FMCG the only possible sector which hasn't done more than 1% in trade today. That's the only sector. Outside of that, IT, consumption, bank is up 2.4%, PSU Bank 2.6%, 2.5% on Nifty Defense, Nifty Realty up nearly 5%, Nifty Pharma up nearly 3%, Nifty Metal also up nearly 3%. So very strong moves across the board that we've seen on the index itself. Chemical stocks, textile stocks, we've seen a whole host of those counters come back into focus and do very well for themselves on the back of that India-US trade deal. Kunal, your wrap for the day?
Well, of course, I think it's been a fabulous close for the index and something which I think was needed after the Sunday shocker for the markets. So I think in that context, we've traversed from the South Pole to the North Pole literally for the indices, moving up from sub 25,000 to potentially briefly towards a sub, to levels about 26,000 for the index today. However, I think it's good that we've settled at 25,700, 750 levels for the Nifty, because this probably brings in some sense of stability and not too much of an overbought nature on the indicators. So I would believe that it's a good close, and the fact that we're hanging around to that 25,700, 750 mark indicates that there could be more traction on the higher side over the very near term.
Okay, Kunal, thank you so much. It's been a great day and it's been great sitting with you on such a good day of trade, frankly. It's been a while since we saw this kind of a move, so a bit of a relief. Kunal's smile is what kind of defines the kind of day we've had. But viewers, that's all the time we've had on closing trades today. Thank you so much for joining us. And of course, more action to continue here on ET Now, so stay with us.